Hey everybody, Boris. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar from May 15th to May 19th, 2017. And the market this week is going to be much more focused on the commodity dollars. Commodity dollars certainly takes center stage as far as news flow goes. We have the monetary policy meetings minutes out of Australia. We have the Australian employment, which is going to be very important, inflation data and dairy data out of New Zealand, and retail sales and inflation data out of Canada. So actually a lot more. And to boot also Chinese industrial production. All of this should have a little bit more of a material impact on the commodity dollars. Also, and this is a critical thing, will be in some ways I think is going to be very contingent on where the dollar itself is at. If U.S. yields start to compress a little bit on this assumption that I have that the dollar rally could be correcting as interest rate hike expectations are kind of tempered, that is net positive to the carry, net positive to Kiwi, and we could see a little bit more of an upside in both Kiwi and Aussie as we go forward. CAD, of course, is its own story as far as trade goes because of all the oil flows that that has been going on. Let's take a look at the charts here first, and then we'll come back to the levels because I think it's kind of interesting as far as where the charts go. Here's the Aussie. And Aussie, after really kind of tumbling down into the lows of 73.50, found some support. Still really shy about the 74. It got rejected at the 74 level. Still very much, if you're looking at a longer term picture, is a very negative construct. It's still very much a sell the rally mode if you are kind of trading on a longer term basis. And it's probably the better trade here is probably sell the 74.50s and maybe 75s because technically you really don't see any kind of a I think at best what you see is sort of a stabilization and maybe inklings of a bottom around the 73 level. If that holds for a couple more days, that could be more productive for the move up. But really, to be a lot more convinced that the Aussie is a buy, you really need to have the 75 cleared. This is the big overhead, the 75, 76. This is sort of the next failure level from 75 down to 73, and that's what we're working on right now. Whatever small rallies we have within it, it really doesn't provide us with a strong technical signal until that whole range gets taken out. For now, it still looks very distributive off the 77s. And frankly, if the 73.50s are tested again to the downside, really, you don't have true support till around 72s. So it's still, all things being equal, looks more like a test all the way down here as we have a full rounded distribution in the Aussie. But in the meantime, we could have some near-term counter trend moves here, which is why I'm saying that there's a potential here for us to move possibly towards the 74.50s before the exhaustion comes in. I certainly would not want to be short, or wouldn't want to establish a high credibility short until we got at least somewhere around the 74.25s or so. And it's quite possible that we could squeeze all the way to 75s. Even if we do, at this level, it still does not presume a bullish construct. It simply presumes just sort of a bigger resistance level of the 75 to 76s. So depending on how you want to trade it, the one interesting thing about buying this at this point is that the risk is very limited, of course, because you're really looking at minuscule 50, 60 pip risk to the downside, and there certainly could be another maybe 100 pips to the upside. So it's an asymmetric bet, but overall still very much in a downtrend market. The big sort of weaker story this week was the Kiwi, with the RBNZ destroying any hopes of tightening bias and taking the Kiwi down with it, which is exactly was their intention. However, and this is an interesting however, what's fascinating here is despite all of the bearish or the dovish rhetoric from the RBNZ, they could not take it below the 68 level. There were buyers in the 20s, there were buyers in the 15s, and now we have a second day of the lows not being tested. And if we have a couple more days, maybe Monday, Tuesday, where the lows from the RBNZ meeting have not been tested, that actually would provide a very positive signal for a small counter trend rally back up to the 79s. The market may simply be ignoring noises from RBNZ because certainly they're not going to cut rates, but the market may simply be just ignoring this. And on the other hand, looking at the weaker U.S. yield structure to plow back into the carry on a short-term basis. So there's not an insignificant chance that we could see a little bit of a strengthening in the Kiwi back up to the 69, 69.50 level. That's really the big resist area here. You could make an argument that this is kind of a volatility candle, but one of the reasons why I'm not as bearish is because you notice that it didn't end on the lows, and more importantly, we now have a second day where the lows have not been tested. So this is where I think technical analysis comes in as a true art. If we have, as I said, another day or two where the lows are not going to be tested, the confidence that we could have a pop in the trade really begins to grow. And I think that's the potential here. In either case, all of these are very, very small ranges. These are 50, 70-point ranges. We're just really trapped in a low volatility environment, and there's very little movement one way or the other here in the Kiwi as we go forward. But in the very near term, I like it to the upside more than I like it to the downside. Dollar CAD, the story here, again, fascinating because obviously oil bouncing back. Canadian economic background is not that great, and we only have just retail sales here coming up at the end of the week, but not horrendous either. The BOC certainly is very, very accommodative. I think the weakness in Canada here is really non-economic. It's a bigger story. It's the sort of fear story that the real estate bubble in Canada may be finally affecting Canadian banks. Certainly it's affecting one of the Canadian how would I say this, subprime lenders who are having problems on their credit lines. And people are worried that they could be sort of a canary in the coal mine to the whole Canadian banking structure as so much debt is taken out against some very, very expensive real estate. And that's really what's driving Canadian dollar lower. It's not really the decline in the oil prices at this point, which have bounced. It's not even the any kind of contraction in the Canadian economy, and it's not even the skirmishes with the U.S. on trade. It's much more of a secular concern about the Canadian banking system. But if those worries go away, it still looks to be that 38 is the top here, and we could start to drift back down towards the 136s. If we have a combination of oil rising back up to 50 and no more news bombs out of the Canadian banking sector, almost all the bad news kind of factored in, you certainly could have more buyers of the loonie, and the loonie could come back down towards the 36s. So for now, 38 remains very much the trade against which the short against which you trade, the level against which you short, with a target of 36 to the downside. Having said this, though, we're clearly just in a consolidated mode right now, and we could be spending our time for the next week or so within this channel quite feasibly. So here's how the levels look. For Aussie, it's really a trade back up towards the 74.50. That's where the resistance begins. For CAD, it's that 38-36 channel. Be watching that very carefully. If we have, of course, news one way or the other, and at this point, I guess it's really the negative news is much more likely. That is, if you have another negative news, the break above the 138s could trigger a move all the way out to 140 because we could have a reconsideration of the whole Canadian banking system. And for Kiwi, another tight range of the 68 to 69 as we absorb all of the news that comes out of the commodity land for the time being. So that's how the week shapes up. Commodities, currencies are definitely going to be the prime event drivers this week. So therefore, could be some volatility here that we haven't seen in a couple of weeks. Wish you guys the best luck, the best of trading. Boris, over and out.